Greetings and thank you for joining us at FutureMoneyTrends.com. I'm here with a good friend, somebody I had the chance and the pleasure to spend some time with over the summer in person. He is without a doubt the person who has the most knowledge on the global economy, the money printers, and the manipulation of the precious metal market specifically. Now, all markets are manipulated, and I believe he will acknowledge that, but there is a very sinister force behind the specific suppression of precious metals. My guest today is Andy Hoffman of MilesFranklin.com, one of the most reputable bullion dealerships out there. It's safe, it's reliable, you don't ever have to worry about what you're getting or when you're going to get it. If you order it, you'll receive it in a timely manner, and it's the real deal. Andy, thank you so much for joining us.
Well, always my pleasure, and those are some big footsteps that I have to step into with that introduction.
Andy, every word out of your mouth is backed by a book of knowledge and research. I mean, I've never known somebody do so much research in a day, so much writing in a day. It's great, and it's a great pleasure, and I'm very happy for my audience to be able to hear you today. So let's get right into it. On the precious metal side, since the Fed did not raise rates, which that was a big shocker, right? The precious metals seem to be making a move here. The markets seem to be kind of stuck. I'm going to have an open floor for you. Are the central planners starting to lose control of the fake recovery and the suppression of the precious metals?
Right. Well, the way that I've put it, from years back, I call it the evil tripod of money printing, market manipulation, and propaganda. And the first to break has been the propaganda leg, meaning, it's been a process over probably several years, but it's gotten to the point where there's not a person on the planet now that actually believes that there's an economic recovery. Certainly not in the United States, and definitely not in the rest of the world, where we're talking about, all-time depression. In fact, my article today was called The Worst Economy of Our Lifetimes, which is a phrase I've used often. And I would say, objectively speaking, it's hard to dispute that. We're talking about the CRB Commodity Index touched a 40-year low last month. And we're sitting right above those levels right now. We're talking about 40 years ago when we had just gotten off the gold standard, when there was no debt in the world, when there was probably 100 trillion less dollars out there in the world. That's how badly the oversupply situation has become. And the reason we've had this oversupply is because of the money printing. It's I use the word deformation as kind of my buzzword, which I got from David Stockman. All of that money printing has caused all of the misallocation or deformation of the economy that has allowed all these shale producers and the Glencores of the world to build for the Chinese government to get all of these dollars and use them to build ghost cities and buy all the copper up in the world and drive prices up. And and create steel mills and iron ore mines that are going to have to all be shut down. So again, we're talking about 40-year lows in commodities, but the fundamentals are dramatically worse than they were 40 years ago. And I think in real terms, commodities, which are the biggest business in the entire world, have nowhere to go but down. And that's just one aspect of it. And then you look at all the other aspects of global trade right now that are going in the same direction. For instance, the Baltic Dry Index, it's at its lowest point ever for the fall, and it'll soon be at its lowest point ever. And you look across the board, you look at wholesale trade, you look at the inventory to sales ratio, you look at the supplies of commodities and all kinds of business things that need to be sold but won't be. And then you look at the businesses that hold these inventories having all-time record levels of debt and too many employees, et cetera, and you realize that we're just getting started. We're in the first inning of an extra inning game.
That's interesting. So you think the commodities have a lot more room to go down. Where does that put gold and silver?
Well, I wrote an article way back a year ago called Commodity Crash, and then in parentheses, but don't worry, gold and silver are not commodities. And in fact, in today's article, I showed they had this chart showing the commodities in order, how sensitive they are to the Chinese crash. And number one, right up on top, there was iron ore and copper and zinc, and there was like 25 commodities. And I said, notice how gold and silver are not on that chart. And the reason is that they're not commodities. Yes, theoretically, they meet the definition, but they are more monetary in nature than they are industrial, which is why China is buying gold and silver hand over fist, while right now they're selling everything else. And the same goes for the rest of the world. And of course, with this oversupply and all the ramifications means more money printing, to try to bail out everything and anything that's been, the debt edifice that's been created, which simply means diluting the value of money, which brings people back to gold and silver. And so, you can look at any financial crisis throughout history. We're talking about over 1,000 years. And whether it's a quote, inflationary crisis or deflationary, it always leads back to a destruction of the value of money.
Andy, over the years, I've seen so many smart people like yourself and Eric Sprott, Craig from TF Metals, talk about the low inventory in the COMEX and the physical demand being, somewhat overwhelming at times. Where are we right now in the metals that are in the COMEX versus how much metal is being traded and how much metal is really out there?
Right. And again, the COMEX is just, the only reason the COMEX gets such attention is because it's, where the manipulation of paper prices is the most prevalent. You see 90% of the price moves of gold and silver go on in this ridiculous exchange, which only has 170,000 ounces of registered gold, if you believe that, which is only a couple of $100 million and barely more than that in silver. Whereas, you see that kind of demand in China in a couple of weeks. So I don't even know if that metal is there, and if it is, it's at the point where there's almost no deliveries going on there. But that said, we've seen 90-something% of the inventory of gold leave the COMEX since the financial crisis. Most of it has left since the big paper raids of 2013. So whatever is there is being taken out, and the same thing goes for this. You look at the Shanghai Exchange; they've lost 90% of their silver inventories, and if the LBMA was more transparent, you'd probably see the same trend. Although you certainly see the trends of the amount of metal that gets refined in Switzerland and then sent out to points east, meaning, that's money, that's gold that's coming out of the LBMA. So, the thing that the cartel's always had on its side is most of these numbers are completely opaque. For instance, Germany wants to repatriate its gold. We never get to see it. They don't even get to audit it. We don't even know what's there and if it exists. Gold at Fort Knox hasn't been audited since 1955 and never will be. The GLD is not required to be audited. In fact, the GLD, which is run by Barclays, which, by the way, just hired a former JP Morgan executive as its CEO, they could send it out to sub-custodians, and the sub-custodians don't have to be audited. So they always have that, veneer behind them of no one being able to actually get into the books. But again, it goes back to my GATA days and what's Eric Sprott and Bill Murphy have been doing for years, and the GATA army, as I call them, which is you do the simple numbers. Clearly, all that demand that's been coming from the East had to have been sated from somewhere other than gold mine production, because we know how much gold mine production is, and we know how much demand roughly there is in the East. In fact, the demand in the East is probably very heavily understated. Because there's the black market in India, there's the Beijing free trade zone, which doesn't report imports, etc. So again, we know that gold has come from official inventories, and probably most of those official inventories are gone, which is why when Germany wants their gold repatriated, they don't get it back. And it's so, how much is left? Probably not a heck of a lot. And I would say that while in previous years, let's say in the early stages of this bull market, 2000, 2005, up to maybe 2008, who knows, most of the suppression of prices probably did have to do with the dishoarding of physical supplies from the U.S. Treasury, from German Treasury, who knows. But I would say in the last 5 or 6 years, it's almost entirely due to the explosion of derivatives and paper strategies, which has caused this extreme thinning of the actual inventories out there, which is why in silver, which is a far tighter market than gold, there's probably only 2 billion ounces above ground on the planet, and most of it is spoken for, like mine and yours. which is why we keep having these massive shortages. We had them in 2008, where the premiums went to 100%. We had them in 2011. We had them in 2013. We had them a little last year, and we had a huge one this summer, which is still going on as we speak, because there's just not that much silver out there. And all it's going to take is one tiny little crisis, let alone the big one we know is coming, to clean everything out like in 2008 and never be replenished.
Andy, if you could give us a behind-the-scenes look at the retail demand, the smart money demand. I know Stanley Druckenmiller, who I think his returns on average over his 30 years were 50% greater than Buffett's, and he just took out a very large position in GLD at like $323 million, I think, in August. It's like 20% of his overall portfolio, twice as big as his second largest position. Behind the scenes on the retail side, and then the big money side over at Miles Franklin. What does demand look like? And then also, if you could let us know how does it break versus silver versus gold buying?
Right. And again, Stanley Druckenmiller or George Soros, they buy GLD. They didn't buy gold. They bought GLD. They bought pieces of paper. And we have no idea how much gold is actually behind the GLD. We do know that the inventory of GLD that they purport has fallen by, I believe, 50% since 2008. Prices have been smashed, and yet the inventory is going away. It's the exact same thing as COMEX. People are taking delivery of it. So that's another story entirely. But, at Miles Franklin, look, we've spent the entire summer, and mainly since the July 19th, as I call it, Sunday Night Paper Massacre 2, when, remember, they took gold down $52 an ounce in, I think, 5 minutes on a Sunday night, July 19th. It was the same exact thing as what happened in April 2013. People rushed into the physical. And again, it was more so in silver because everyone knows it's so much of a tighter market and it's so much more undervalued relative to gold, and the production outlook is so much bleaker because it's tied to copper and silver prices, which are plummeting, copper and zinc prices, which are plummeting. So we've had massive shortages all summer. We've had the highest ever premiums for junk silver. We've had the highest premiums in Eagles and Maples that we've had since 2009 at the latter stages of that shortage. They've somewhat dissipated in the last few weeks, but we're on pace for probably our best year ever. If not, it'll be our second best year. Our best would be 2011. And around the world, it's unquestionably, from the objective numbers out there, going to be a record level of demand for both gold and silver. Again, on the retail side, you're seeing it more in silver right now. It's simply, as they say, the poor man's gold. There's more people that are looking for it. It's also tighter market, so it kind of, I think, especially out here in the West, it gets the attention of a lot of investor types who are looking for, they see the potential for shortages, whereas gold is really still more of an Eastern part of the world phenomenon. I would say, silver has been dominating our sales all summer, and probably for the most part, as it has been in Canada for several years in the Western world. But again, there's unquestionably record demand, and any objectively speaking, around the world for 2015, it'll probably shatter the records from 2013 and 14. And inventories, again, wherever you look at inventories where they're published, they're at or near record lows. And I'm sure if you were able to look at the books of the official owners of gold, like the U.S. Treasury, I'm sure it would be at record lows also, except we won't be able to ever see that. And then, of course, the big pink elephant in the room, and I mean, no one has talked about this more than me, especially given that I spent so many years working in the industry, is that the mining industry is on the verge of collapse. And the fact that the gold price went up, $50 in the last few weeks, or silver went up $1, doesn't change the fact that most miners are on the verge of bankruptcy right now. And I'm waiting to see if their accountants are going to force them, the primary gold and silver miners, to take write-downs this quarter, or simply wait until the end of the year when they're mandated to look at their reserves and resources. There's a lot of companies out there that have been just destroyed by years and years of capital strangulation by the people. The good engineers and geologists have left the industry en masse. and there's no capital available to them. There's been no discoveries. And when it comes to silver, remember, 2/3 of all the silver in the world is the byproduct of other types of mines. And half of all the silver in the world comes from zinc, copper, and lead mines, which, by the way, their plunge in price is why the Glencores of the world are on the verge of bankruptcy and why they're cutting production left and right. So we're going to see dramatic declines. There's no doubt in my mind we've already seen peak gold and silver production in the past year. And I think in the next few years, especially if this commodity collapse continues, we could see, we predicted in our Miles Franklin All-Star webinar panel podcast last year, we could see a 25 to 50% decline in silver production because of the decline in zinc and copper and lead prices. So again, you're talking about a perfect storm of demand, supply, and production all hitting at the same time. And monetary fundamentals, whereas every bank in the world, central bank, is printing money like it's going out of style.
I want to get into that, but before we get into the money printing, on the mining side, I just spoke to a friend prior to calling you. He runs a mining company. He was showing me a recent transaction. The company was basically $110 million 5 years ago. It just got purchased for 1.6 million Canadian, and it got purchased for 1.6 million Canadian in shares of the other stock that was acquiring it. So it certainly is an extremely bloody situation. Now, for listeners who are listening to Andy, he does represent a bullion company because he's very passionate about the physical precious metals, and he believes that's the most prudent thing you can do right now is own those metals. But he also was a mining analyst for years and even helped, I think roughly, you probably had 20 to 30 clients that were mining companies at the time when you were at Torrey Hills. I want to ask you, so people understand the dire situation in the mining sector, once this supply is gone, because these companies either go bankrupt, they go away, they shut down the mine, how long does it take a mining company to even get something into production from zero to production? And then how long would it take a decommissioned mine to go into production? This isn't something that can be fixed overnight because gold goes up $1,000.
Right. And again, this is a big question. Remember, I spent 10 years on Wall Street as an oil field service sell-side analyst. So I've watched, the same thing happen in the oil industry when you had a massive, in fact, I came into that industry in the mid-90s after a 15-year depression in oil. And then I watched what happened when you had the price of oil temporarily crash to $10 a barrel in late 98, early 99. And we saw what happened then when, that's when you had Exxon and Mobil merged and BP, Amoco, Arco, and Texaco and Chevron and et cetera, all these companies, ConocoPhillips, they shut everything down. A lot of companies went bankrupt, and the bigger companies spent years, consolidating and high grading their prospects and shutting down production and reducing capex. And then getting things back is another story because again, you put all that time and effort into the mine, and then you mothball it. It takes an incredible amount of time and effort to unmothball it, getting the people back and recommissioning it and getting your permits. And of course, you need a lot of capital for that, and you need much higher prices. And a lot of things, in oil, for instance, a lot of times once you shut that well in, it'll never get the pressure back. It's not quite the same with mining, but it's similar type issues. Once you stop something, the momentum is the inertia. It's very hard to start it up again. And again, unlike oil where there's been tons of discoveries, there's been no discoveries in gold and silver. It's been, we picked the high hanging fruit long ago. And there hasn't been a single. In fact, I wrote an article a few years ago, probably in 2012. I think it was called "The Only Major Discovery of the Last 10 Years Gone Goodbye." I was talking about the discovery they made in Ecuador, Aurelian Resources, the Fruta del Norte mine back in like 2006 or 7, not mine, the Fruta del Norte deposit, and they never developed it because the Ecuadorian government wants a 70% royalty. And that was the only major discovery that I can remember in my 13 and a half years in this business. So it's not like there's discoveries out there waiting to be, to be done. I mean, yeah, there's stuff like the one in Chile with Barrick, which will never get done for a lot of legal reasons. But most of it is just simply they shut stuff in that was marginal in the first place. It needs dramatically higher prices to even be considered. And once that process goes, it's going to be years coming to get it going.
It's an interesting setup where you have a collapsing mining industry, slowing economies, and then now we've got the Fed, who, I mean, give me a break. It was never going to happen. If it did happen, it was going to be like nothing, like a 0.25% increase. And now that everybody's speculating, will they raise rates? I mean, it's ridiculous.
It was never going to happen. I said all along it was never going to happen. Why would it happen? Why would you? What gets lost in the whole thing is logic. It's like this. I'm a Met fan. This baseball slide. Everyone's so worried about whether he touched the base when the big picture is he tackled the guy. And the same thing with the Fed, with the rates. Why would the Fed be raising rates when, as I say, we are in the worst global economy of our lifetimes? I mean, when you talk about the Baltic Dry Index and the CRB Commodity Index and Chinese imports and exports collapsing and our unemployment, the lowest labor participation rate essentially in the history of the nation. And everyone's going, well, they're going to raise rates. Why would they raise rates? The debt of the Federal Reserve alone, they're holding $4.5 trillion of toxic, overvalued bond securities. Why would they raise rates and put a gun to their head? Remember, their job is to support the U.S. government, no matter what anyone says about their independence. So if the U.S. government is the most indebted entity in the history of the planet, why would they raise rates and do so during a bad economy? It's really just kind of this whole face-saving thing. It goes back to 2013. I love to talk about that closed-door meeting that Obama had with the too big to fail CEOs, all of them in April 11, 2013. And then 2 days later, gold falls $100 and silver falls $6 an ounce for no reason. And then all of a sudden you hear the term tapering starts coming in, and recovery and the rate hikes. And the fact is that here we are years later and things are much worse. And people are talking, and every bank in the world, every central bank is lowering rates to zero or negative, and they're all QEing it to infinity and having this final currency war, which I predicted 2.5 years ago. And they're going, well, the Fed's going to raise rates. No, why would they raise rates? And if they did, again, they're talking about a 1/4 point. How would a 1/4 point matter anyway? In fact, it would matter because it would cause markets to sell off even more, because historically overvalued financial markets that are based on record low interest rates have nowhere to go but down if you raise rates even a tiny bit. So again, it was never going to happen. Again, that propaganda leg of the evil tripod is broken. No one is listening anymore. And so what's next to go is going to be the market manipulation. Obviously, they're losing control. They lost control of commodities. They lost control of currencies. A lot of stock markets are in bear markets right now. I wrote about, quote, the last to go markets a few months back, where I said, look, the last things that they're going to lose control of are going to be like the Dow and the paper, gold, and silver markets, because they're the most widely watched and important. But they've been losing a lot of markets, and eventually they'll lose all of them. And they may lose them, by the way, to hyperinflation, and they may lose them to a 2008 style crash. So either way, it's going to be in real terms losses. I mean, you look at the Venezuelan stock market. It's the best performing market in the world right now, and the country's falling apart. So don't be surprised. Don't be surprised if the Dow does what the Venezuelan stock market does.
Yeah, so for 2016, are we looking at the helicopter money? Are we looking at complete chaos? Potentially with the money printing? Absolutely.
I mean, it's, like I said, when I predicted the Chinese devaluation of the yuan, the day before, I said the upcoming cataclysmic financial bang to end all big bangs. They just started the process. They just took it down by about 5%. But just wait until they start really taking it down. This final currency war will go into hyperdrive, because there's not going to be a single central bank in the world that's not in easing mode. And as we know, the Yellen reversal, as I call it, has to come. It's, we're the head of the food chain, but eventually we're going to have to give up the ghost too, pretending that there's a recovery and that we're considering raising rates. And eventually, they'll lose control of markets, and they too will be forced to overtly ease. And remember, they do a lot of stuff covertly now, but they will overtly be forced to say, yes, we're considering NIRP. In fact, one of the Fed governors the guy from Minnesota said, yes, we should do it now. They'll consider NERP. They'll consider a new round of QE. Just give it some time, and potentially not that much time.
Well, as soon as one of them starts to float it out there, you know it's coming. It's like 6 months away.
Yeah. I mean, it doesn't help the situation, but, they think that there's some psychological advantage of saying we'll go to negative rates. Yeah, I mean, and everyone else is doing. That's the final currency war. I mean, Europe is at negative rates now. The only reason Japan's not doing it is they've run out of treasury bonds to monetize. They bought up everything already. But eventually they're going to be forced to try it. And as I said, back in August, we are at the end of the belief that central banks can save us. So when they do it, there's a good chance that it completely backfires and is the end of the end, where, we start to hyperinflate.
Andy, there's so many scenarios that could happen. If we could just close out with, do you think it's going to be a domino effect where Japan goes, Europe goes, U.S. goes, and possibly there's even dollar rallies in the midst of that because, people are fleeing currencies? Or do you think the currency war ends with a big bang where people flood into precious metals and the fiat currencies? There has to be some type of major revisement, governments worldwide, of all currencies.
Well, again, no one has a crystal ball, but I will say that back in December 2013, not 14, 13, so we're talking about 2 years ago, I predicted that the dollar, despite my being super bullish on precious metals and talking for years about, the dollar losing its purchasing power, I said the dollar will soar against other currencies. That doesn't mean its purchasing power goes up. It means its purchasing power against other fiat trash goes up because of the liquidity vacuum of it being the reserve currency. And when you have a currency crisis, that's what happens. People go to the dollar simply because it's more liquid. And sure enough, the average currency is at an all-time low against the dollar. That doesn't mean the dollar is doing so great. Against real items of value, the cost of living over here keeps going up. But yes, I continue to believe that, barring crazy events, you talk about wars and stuff, who knows? I believe that there will be a continued collapse of as they call them, emerging market currencies, especially the ones that are heavily, heavily tied to commodities, which, by the way, is at least half of them. But again, how the dollar does against other currencies really doesn't matter. For instance, I also believe the euro is going to break up. The whole Greece thing is far from over. It'll break up. So who cares what the exchange rate is of the dollar versus the euro, especially if there isn't a euro? Or if the Japanese, which are so far along in their Abenomics, that if they hyperinflate the yen, does that mean that the dollar is strong because a major economy of the world hyperinflates? No. But I do believe you're going to see the, quote, exchange rate of the dollar go up. Because look at what it's going against. But in time, the dollar will continue to lose its purchasing power until eventually there'll be a major currency crisis in which people fear the dollar itself and flee into actual real items of value like gold and silver, which they've been doing in the East, and they've been doing slowly and surely in the West, but it hasn't been the fear like you've seen in 2008 yet. But it'll come, and when it does, I don't think it will be reversed.
Andy Hoffman of MilesFranklin.com, a precious metals bullion dealership. Andy, are you guys going to get the New Orleans show?
No, we don't go to that show. We really only go to the type of shows where we're meeting investors, not really, other vendors and companies.
All right, sir. Well, thank you very much for your time. I appreciate it. You have a great day.
You too.